welcome to the fourth day of our annual Model Portfolio Review Week. I'm tuning in from the Chicagoland area, and Cindy is tuning in from Indiana. And you can use the question section of your GoToWebinar control panel to let us know where you're tuning in from. We always like to hear, and it's a good way to kind of get used to using the question section, because we'll have some time towards the end of the presentation for some live Q&A. So you can always submit your questions, and we'll go through them and pick a few out for Cindy to answer. Appreciate you joining us on the fourth day. And I also want to always ask our audience if we have any VMQ stock portfolio holders in the audience. If so, we'd love to hear how many stocks in the portfolio you're currently holding. So feel free to share that via the chat as well. Give everyone a few more seconds. I see some people just joining us, so we'll let them get settled and then we'll begin. We have a lot to cover, so I want to get started as soon as we can. All right. Well, hello and welcome to this afternoon's webinar, AAII's VMQ Stocks 2025 Portfolio Review, led by Cynthia McLaughlin. Thank you so much for joining us. We're happy to have you all here. My name is Jenna Brashear, and I'll be your host for today. We really appreciate you joining us for the fourth day of our Model Portfolio Review Week, where we'll be taking a look at the VMQ Stocks Model Portfolio. And then each day this week, we have been and we are highlighting a different AAII model portfolio. So tomorrow at 1 p.m. Central, John Bykowski will walk through Stock Superstars report. And then you can register for free at aaii.com/webinars if you'd like to join that event. Before we begin, there are a few things I'd like to go over. So I want to remind all of our webinar viewers that AAII is a nonprofit educational group and is not a financial advisor, and thus is not able to give personal advice. If you want to view our full disclaimer, please visit aaii.com/privacy/disclaimer. And then please keep an eye out on your chat section throughout the webinar, as I'll be sharing helpful resources and links that pertain to today's content. So we have our question section, which you can use to ask questions during the webinar. And then we have our chat section, which is more of a one-way, where I will input helpful links and resources and other special offers, anything that I think could be helpful. So keep an eye on that as well. There's kind of two separate areas. And if you have questions for our speaker during the presentation, please submit them using the question section of your GoToWebinar control panel. And then once our presentation concludes, I will select a few for Cynthia to answer. And then if your question isn't selected during the broadcast, feel free to email us at members@aaii.com. And our presentations, our presenter slide deck is available under the handout section of your GoToWebinar control panel, which is located on the right-hand side of your screen. It will also be emailed to all attendees. And then if you have any issues with your audio or the video during the webinar, please visit the GoToWebinar website for support at gotowebinar.com. I'll also put a helpful link in the chat later today, just to make sure that, if you have any audio or video, that we help you as soon as we can. And then this presentation is being recorded, and a replay of the webinar will be available on our YouTube channel and aaii.com/webinars. And in this presentation, Cynthia will cover a few things, such as key lessons from the VMQ Stocks Model Portfolio's 2025 performance, how to find your own stocks at the intersection of value, momentum, and quality using the VMQ Analyzer tool, actionable insights to refine your investing strategy for 2026, and how to build your own portfolio using the VMQ Ideas List. We have a special offer for today's attendees. You can get a $50 discount on any new one-year subscription to an AAII premium product, including AAI Platinum and also including VMQ Stocks, by visiting aaii.com/webinar-week and entering the promo code WebinarWeek50 at checkout. And I know that's a lot of information to digest. I threw a lot at you, so please don't worry. I will add it to the chat momentarily so you can easily access. I'll include the promo, the Webinar Week special, landing page, and anything else I can add into that chat section. And with that, I'd like to hand over the presentation to Cynthia.
Hi, everyone. Thank you for joining this afternoon. Most of all, Happy New Year as we are moving into now in 2026. I hope everybody is happy and healthy. And I wanted to give a special welcome to our current VMQ subscribers, and also thank those who are not current subscribers and are joining to learn more about the product. So just wanted to make sure everybody knows how much I appreciate their time and how much I appreciate our subscribers. Okay, so our agenda today, I'm going to talk about the VMQ Stocks methodology overview, just giving some information about the value, momentum, and quality aspects. For those of you who are current subscribers, this will be a little bit of a kind of a repeat, something you're familiar with, but I'm really hoping to reach those people who are joining to learn about the VMQ portfolio. And I will then talk about the portfolio characteristics, talk about what happened in 2025, give a 2026 outlook, and we're going to learn more about using the VMQ ideas list. And I will go over some VMQ website resources, and as Jenna discussed, we will go into some questions and answers. So let's get rolling. Okay. So the VMQ portfolio is a factor-based approach. So there are investment factors that are associated with higher returns and better outcomes in the long term. So what we're doing is the V stands for valuation. We're looking for low stocks with low valuations with a value grade of A or B. And then we're looking for stocks that have a strong relative price strength, also with a grade of A or B. And then we have what we call a quality overlay. We're looking to filter out the junk or those weak stocks that are not going to perform very well. So we're looking for stocks with good quality and having again, a grade of A or B. So looking at a value score example, the value score, first of all, considers 6 ratios using the VMQ Analyzer. So stocks with the composite valuation rank in the highest 20% of all stocks get a grade of A. And stocks in the second highest quintile, 61 to 80, get a grade of B, and at the other end, the lowest rank is 0 to 20, so we're assigning those an F. So each ratio receives a percentile rank and a grade and is used to calculate that composite score. My colleague Charles Rotblatt always explains this as, it's just like in school. Grades of A or B, you probably were praised for. Grades of D or F, maybe you got grounded or you went to tutoring. So the example on this particular slide is for General Motors Company, a current VMQ holding, and they have a value grade of A. So it's among the cheapest of stocks, and we call that deep value. So it has a price to book ratio of 1.14. That was as of last Friday, the 2nd of January. So it is in the 31st percentile, corresponding to having deep value. And conversely, I looked at United Rentals, that has a value score of 32. So it is expensive. And as of Friday, the 2nd, its PE score was 20.8. So it ranks in the 53rd percentile with a grade of C actually, and a price to book of 5.73. So price to book of 5.73, it goes into the 81st percentile of all US listed stocks, equating it to ultra expensive. So kind of a tale of two stocks. GM is on the slide, and I'm providing a little more information about United Rentals just to compare and contrast. So moving on to momentum. The process for determining a stock's momentum uses a weighted 4-quarter relative strength, and it starts by determining its relative price change for each of the last 4 quarters. And then the numbers are weighted with 40% given to the most recently completed quarter. We call that Q1, and then 20% given to each of the previous 3 quarters. So the 4 weighted relative strength measures are added together, and they create a cumulative weighted 4-quarter relative strength score, and that's compared against the weighted 4-quarter relative strength for all stocks to determine the 4-quarter weighted relative strength. So it's a lot to take in, but I also put together information about General Motors to illustrate that they have a strong momentum score of 86 and a momentum grade of A. So the emphasis is on the most recent quarter, which is pretty easy to visualize. And this is the breakdown of what you would see in the VMQ Analyzer if you ran General Motors through and scrolled down to look at the breakdown of their momentum score. So their most recent quarter, their score was 92, and then the previous 3 quarters, it's a little different, not quite as strong. Okay. Moving on to quality. I think quality is interesting because quality in investing means a little something different to everybody. There's really no standard way to describe or kind of grade quality, but how we do it in the VMQ portfolio, I mentioned that it's an overlay objective, and it determines which stocks have these additional traits associated with higher than average returns and which stocks have traits associated with more disappointing or subpar returns. So 8 specific traits are utilized, and the quality grade is the percentile rank of the average of the percentile ranks of the 8 measures. And the 8 measures are return on assets, return on invested capital, gross profit relative to assets, buyback yield, change in total liabilities to assets, accruals, and the Z double prime bankruptcy risk score, and the F score. So again, looking at General Motors, they are in the 49th percentile, and they have right now, I believe, a quality grade of, I think it was B. So that is some more information on the value, momentum, and quality methodology. Okay, and talking about the model portfolio characteristics. So what you're looking at is 2 pie charts. The pie chart on the right-hand side of the screen is the iShares Dow Jones US ETF. That is VMQ's benchmark. So every Friday when we update the performance. We are updating VMQ's performance, and we are also updating IYY's performance and showing how VMQ is performing relative to IYY. So IYY is a market cap weighted broad large cap ETF, and VMQ is market cap agnostic, meaning we select stocks based on the model portfolio criteria that I just talked about, and we do not look for, say, stocks that are either large cap or mid cap or small cap. We're focusing on that criteria. So the chart on the left shows VMQ's allocation, and what I did for this particular chart is I based this on portfolio weights by sector. So at market close on December 31st, we had a portfolio value of like 188,988, just for round numbers. So a theoretical average holding would be about $9,500. And I wanted to point out that we have the greatest number of holdings in the consumer discretionary sector, and the industrial sector has 4 holdings. So why this is important to maybe look at this from an asset weighted perspective is you have, say, like AutoNation, and they have a relative weight in the portfolio of 196% versus, say, I don't know, like I'm looking at another stock. So AutoNation is in consumer discretionary, and G3, their weighting is much more in line with the average or theoretical holding. So the consumer discretionary sector is a little overweighted by the number of assets and also by the number of stocks. The next slide I will show breaks it down by the number of stocks per sector. So another thing that is very different about IYY is this data for IYY was as of September 30th, which is the most current available from BlackRock, and the top 10 sectors that are represented are, you know, like a technology or top 10 stocks. So you're getting a lot of the same exposure and movement with NVIDIA, Microsoft, Apple, Amazon, Meta Platforms, Broadcom, Alphabet, etc. So those are the top holdings in IYY, and they make up about 36% of the portfolio. And with VMQ, consumer discretionaries, 44%. So here is the allocation by the number of companies in each sector. It's just a little different than the asset weighted that I put together. So again, consumer discretionary, 35%, and then we have, you know, like one materials company, that is CF Industries, and we have Ranger Energy, just one company in the energy sector, and 2 healthcare right now. And then the consumer staple, BJ's holding wholesale clubs. So those of you who have participated in the growth the dividend investing and the shadow presentations earlier in the week. I've seen this slide before, but I think it's an interesting one just to spend a few minutes on. So it highlights the total returns of the S&P sectors, market cap indexes, and factors over recent years. What it's doing is it's helping us identify the trends and shifts in performance year over year. So things, you have that kind of change in leadership between sectors and also between investing styles. So in 2025, communication services and information technology led the way. So the returns were pretty spectacular, 33.6% and 24% respectively. And these sectors were also top performers in 2024. So financials rebounded from a mediocre year, and it also performed well, and real estate and healthcare just lagged. But when you look at broader indexes, the S&P 500 delivered 17.9, and growth stocks outperformed value by 9%. So this is a little different if you look at mid-cap and small cap. Mid-cap underperformed slightly, and small cap growth underperformed value by 1.3%. So what this heat map is really emphasizing is how sector and factor performance vary year to year. Energy, it did really well in 2021, 2022, but it was an underperformer in the last 2 years, kind of highlighting the importance of portfolio diversification and maybe that long-term investing. So you're adapting your strategies and not relying too much on one particular sector or market trend. And I wanted to point out the market cap breakdown for VMQ. So right now, GM is the largest holding by market cap. And these are currently categorized by the S&P size based on the index that they're a part of. For those stocks where you do not see an S&P index, those holdings are not part of an S&P index. So we have the majority of the holdings in small cap stocks. So those are the stocks that we typically see qualifying on the VMQ ideas list. And we do have 3 holdings in the S&P 500 large cap, GM, United Rentals, and CF Industries is also classified as a large cap stock. And one thing with the VMQ portfolio, we do not actively look for dividend paying stocks. We do have shareholder yield as a criteria when we are selecting by value, but we do not have VMQ as a strategy that wants to or that seeks to pick out dividend stocks. But we do have several high paying dividend stocks within the portfolio. Again, General Motors has the highest shareholder yield, and then Millicom International Cellular, that's more of an international stock. It has the highest dividend yield. And shareholder yield can be found in the valuation analysis tab on the VMQ website, and dividend yield is in the characteristics tab. So just wanted to point that out. And I wanted to mention, if you are seeing negative shareholder yield, that is because either companies are issuing new shares, causing dilution, or they could be issuing even debt to lower the shareholder yield. And the VMQ strategy offers very unique exposure. This is a slide. It is from my January 2nd brief commentary. And I recently went ahead and examined the S&P 500 quality, value, and momentum top 90% multi-factor index, the mid-cap 400 version of that, and the small cap 600 version of that. And these indexes are a subset of stocks found in the S&P 500 index. And the 500 index, the 400 index, and the small cap 600 index, respectively. And they exhibit quality, value, and momentum characteristics. So I applied the VMQ Analyzer to the top 5 holdings of these of 3 exchange traded fund ETFs that represent these 500, 400, and 600 indexes. And I wanted to see how they did against or based on the VMQ strategy. So what I found is their value, momentum, and quality scores, as you can see, that they provide good exposure to momentum and quality, but not necessarily the value factor. So again, VMQ is not a it's market agnostic. We are not seeking out any type of specific market exposure. And these indexes are composed of securities with the multi-factor scores, and they represent the top 90% of each respective index after excluding those with the lowest quality value and lowest momentum. So they are excluding the most expensive and weakest stocks. And again, what the VMQ strategy does is it starts by seeking stocks with the best combination of low valuation, strong momentum, and high quality. So what went on in 2025? Well, we know that concentration in the S&P 500 remains high, with the top 10 stocks making up over 41% of the weight. So I went ahead and I wanted to see how 2 of those stocks did if you put them through the VMQ Analyzer. And as expected, they are ultra expensive, but they have strong quality, and they have average to strong momentum. And moving on to VMQ's performance. So VMQ came out at year end gaining 10.2%, whereas IYY gained 17.1%. So the difference, as I explained, IYY it has exposure to those top 10 performing stocks in the S&P 500. And for comparison, VMQ lagged the benchmark by 16.3% in 2024. And in May of 2025, it managed to gain 6.8 and 12.7 in August. Those were its high months, whereas May and June were high months for IYY, gaining 6.4% and 5.3% respectively. And there's a graph of this monthly performance, just so you can see what that looked like, kind of laying them on top of each other. And we always talk about the impact of 2018 on VMQ. So in VMQ's inaugural year of 2018, it suffered a 21.9% loss, whereas IYY suffered a 6.5% loss. So 2018 had the most bearish December since 1931, and it was the worst year for stocks since 2008. So IYY fell 5.1% in 2008, and then 19.5% in 2022. So that just shows you what happens with the 2018, and then if you move on and look at this, taking that year out, VMQ has a 139.8% return since inception versus IYY, which is 193.4%. And I wanted to just tell you about the risk characteristics a little bit. The VMQ's current risk score is 1.72%. So it has 72% greater volatility than IYY. And the model portfolio has realized a 10.6%, cumulative gain on 9.9% annualized versus a 21.6% for IYY, which equates to 15% annualized. And this is over the past 36 months. So lots of facts and figures. So value versus growth. So growth did do better than value this last year, and I just picked out 2 ETFs and put them in the same chart to display that, the Vanguard growth ETF and the Vanguard value ETF. So emphasizing value will perform, it has performed well over the very long term, better than growth, but it's a long-term strategy. It's more that patient investing strategy. And moving on to the winners and the losers for 2025. So the winners and losers from the current portfolio, Millicom International really knocked it out of the park. It was added mid-year, and it gained 127.3%. Pediatrics MD scored 94.2%, and Primoris Services has been in there for a long time. It was the highest gainer of all the holdings that were in the portfolio for the entire year. And then CF Industries, it did that along with Aztec and Sally Beauty. They were the losers. So there were 8 out of the 14 holdings in the VMQ portfolio for the whole year that had positive returns, and Primoris had the best returns. And qualifying at year end, the holdings that qualified, so Aztec, CommScope, those were new holdings, and GM, Millicom, and our new holding that replaced Jacobs, Nexan, Pediatrics, Sally Beauty qualified, and Tenet Healthcare. So looking at the changes for 2025, core natural resources was actually replaced due to low quality, very weak quality, that we don't remove stocks from the VMQ portfolio very often. due to quality, but they reported a net loss for the first quarter, and their ROE deteriorated from like 19.7 down to 4.4, and their ROA deteriorated. The F score was also deteriorating, and they merged with Arch Resources, so their number of shares outstanding increased about 79%, and that contributed to a minus 67.8% buyback yield. So those were the quality factors that kicked them out of the portfolio. And we had other holdings that were replaced in the portfolio. So we replaced Caleres with Tegna due to weak momentum. And then Tegna was replaced with Pediatrics when Tegna was bought by, it was announced that they're being bought by Nexstar Media Group. CNR was Core Natural Resources. We replaced that with Millicom. Verco was replaced with CF Holdings, and TriPoint Homes, their momentum deteriorated to an F score. We replaced that with Sally Beauty, and both Prague and Pilgrim's Pride, after earnings announcements last quarter, their momentum deteriorated, and we replaced them with CommScope and Aztec. And I just wanted to talk a little bit about Jacobs. Jacobs was replaced mid-December due to very high valuation. So this is actually a good thing to have to replace the stock due to high valuation. And we made, I believe it's 131.5% on the holding. It was one of the original holdings in the 2018 portfolio. So it was a little more difficult to perhaps let it go, but it had been a high performer. And the 2025 portfolio turnover statistics. The turnover ratio was 26%. We had 8 additions, 8 deletions, and our annualized holding period is 3.83 years. So looking at the best and worst additions, Pediatrics Medical was added and Tegna was deleted. So keeping track of how they're doing today versus if we had held Tegna, Pediatrics is winning over Tegna, whereas Aztec was added and Prague was deleted. So Aztec is losing over if we'd continued to hold Prague. So I think one of the good things about the portfolio, we have defined addition and deletion rules, but sometimes when you have a little bit of hindsight, it's good to just keep track of best and worst to see what actually happened. So if you look at, we're about ready to head into earnings season for the fourth quarter 2025. JP Morgan kicks off the earnings season in kind of earnest next week with an announcement of their results. And this represents what it looked like or what is forecasted or expected as of Friday, January 2nd. So the 18 companies in the S&P 500 index who have already reported earnings, 83% were above the analyst expectations and 16% reported earnings below. And this kind of frames it in a typical quarter since 1994, where 67% of companies beat and 20% miss. And then over the past 4 quarters, 78% companies beat and 16% miss. So in aggregate, companies are expected to report earnings that are 14.4% above estimates, and that equates to a long-term average surprise factor of 4.4%. So the average surprise factor for comparison over the prior 4 quarters is 7.6%. So maybe little lower surprises going forward. Stay tuned, we'll see. Moving on to the outlook. So this is the 2026 interest rate outlook. And if you kind of go forward way to the end of the year on December 9th, when the Fed has their last meeting, this was as of January 3rd, and it is from the CME Fed Watch tool. And we are looking at about a 76% chance of like 1 to 2 rate cuts. So I'm just looking at 1 to 3/4% rate cuts for 2026. So we'll see what happens. The Fed meets this month, and we'll have to see if we get a rate cut or if they stay put. There is some political or policy uncertainty with Powell leaving in May. And thinking about the first quarter and earnings growth rates, they're looking for LSEG is looking for an earnings growth rate of 14.4%. So if you take out that volatile energy sector, that improves a little bit to 15%. And that is what is forecast. I wanted to just share that. It'll be interesting to go back and see what happened. And looking at what could happen, we have 3 years of very stellar returns going from 2023 to 2025. It will be increasingly harder to surpass these expectations. And if you go back to 1926, there are only 9 times when large cap stocks have realized gains of at least 20% on consecutive years. So returns following those occurrences have been mixed. Okay. And now I think this is the fun part of the presentation. We're going to talk about the VMQ ideas list. So here are the top 16 companies in the VMQ ideas list as of January 2nd. So what I did to come up with this chart is I first remove qualifying and current VMQ holdings, and then I add sector and industry column just to better understand the characteristics, and then I add the composite value, momentum, and quality score, adding these 3 things together and sort from highest to lowest. So on January 2nd, a total of 78 companies passed. We have a lot in the consumer discretionary sector. 28% of those were in consumer discretionary, 22% were energy, 21% industrials, and 10% healthcares, and then a smaller number in materials. So there were several consumer staples and also a handful of IT companies. So the highest composite score was 273 and the lowest is 191. And I wanted to share this and talk about it because if you're creating an initial VMQ portfolio and you're really hesitant to add holdings that are not qualifying or don't necessarily make sense to you, you can go to this VMQ list, ideas list, and find stocks that qualifies. Kind of a feeder list, if you will. But conversely, and a caveat, just because a stock is on this list doesn't mean that it will make it into the portfolio. Okay. So using the VMQ ideas list. So I went ahead and looked at the VMQ ideas list and just took one stock that was currently qualifying and ran it through the VMQ Analyzer. So the VMQ ideas list is on the VMQ homepage, and then the Analyzer is always up in the right-hand corner, and you're going to type any exchange traded stock in here, publicly listed, and click Analyze. So the Analyzer provides the same information as does the portfolio. It doesn't provide any, it does not format the information any differently. If you're using the Analyzer, you're going to be able to see the VMQ value, momentum, and quality score, and be able to scroll down and see everything behind that score and grade. And this is an example. If you scroll down of what you will see for the value score, the momentum score, and quality score. And also in the VMQ Analyzer, you can look at the VMQ score, or you can also click on the snapshot. And the interesting or helpful thing about the snapshot, it provides this momentum information, provides the company summary, the market cap, and the 52-week trading range. But you can look at the industry information, so you can get an idea of how this particular stock compares to the industry for various ratios. Okay. And talking about potential portfolio changes and what is up for 2026. Right now, Consensus Cloud has a weak momentum score, as does CF. And those, I'm watching them and with the potential of replacing them should the momentum score weaken to 20 or below, which is equivalent to an F. That would call for replacement. And BJ's, Wholesale Club, and United Rental, they have value grades of D because they have become expensive. So one thing to note is that holdings are not allowed to be sold for 6 months to avoid unnecessary trading, kind of tying back to those portfolio turnover metrics. And we set an upper limit on position size for any single stock, so it doesn't have too much influence on a portfolio's returns. So a model portfolio whose position has grown to 2.5 times the average size, it is a candidate to be trimmed. So I talked about the sector allocations and the average portfolio position size being 5% or about 9,500 on December 31st. So the maximum position size based on that would be 23,623. So it is possible to potentially trim some of these and maybe reinvest them in holdings that currently qualify. Okay, so a little more on the VMQ stocks resources, website resources. So when you're on the VMQ homepage, if you click on portfolio, well, first of all, you're going to see the commentary and you're going to see recent portfolio updates over on the right-hand side of the screen. And if you click on portfolio, this is where you will see the holdings and you can look at their performance and then dig into the valuation, momentum, and quality metrics and the characteristics. Okay, so performance details, what we have is we have the date that we issued the portfolio alert. So when we issue a portfolio alert, currently we're sending out an alert just letting you know that we are removing the stock from the portfolio and why, a little background information, and then also a companion alert about the stock that is replacing the holding that is being deleted. So what you're seeing here is you're seeing the alert dates for when the particular holding was added to the portfolio, the purchase price, its current price, and the daily change, and the corresponding return, and then the benchmark return, that is IYY's return. So these are little snippets from the valuation, momentum, and quality tabs, just showing the overall grade, overall score, and then each ratio that is used to comprise those grades and scores. And the same with momentum, the average grade, score, and then kind of that weighted 40 or 4-quarter relative strength rank. And for quality, there are 8 components. So this is information that you will see for the entire portfolio when you visit those particular tabs. And the final tab that you can look at is the VMQ characteristics, and here we have information like the dividend yield, the market cap, and the average dollar volume and monthly trading volume, and finally on the sector and industry. And over here you can click to see recent news for each of the holdings when we have news, and we have the commentary each week. We will have the commentary, and then we will also note at the bottom which holdings we have news and new information for. And you can access it that way, or you can go back and look at the archive as needed. And within the portfolio, if you want to look at the overall portfolio performance, you would click on the performance tab and be able to see the VMQ stocks portfolio in a holistic manner. And that is different than looking at the holding, the performance of each holding. So looking at it individually and then looking at it kind of as a whole. And we update the performance each Friday, and you'll see the week, the month, year to date, and all the way at the end. It's not part of this screenshot, but you'll be able to see kind of the inception information as well. And the portfolio activity is for those alerts. You can go back and see when we issued an alert and why. So this is for the most recent couple of months, capturing those portfolio changes. And transactions, that is for kind of the cash transactions, buys, sells, dividends, interest. And help and resources, just as a reminder, when you're seeking navigational tips or more information on the strategy, such as better understanding the sell rules or how to follow an alert, you can go to the how-to resources, and they're great for both new and seasoned subscribers. And one more thing, we have the new AAII Investor Hub, and I wanted to point out that one thing that is really helpful that you can do with it is if you have a portfolio, you can change the view to reflect the VMQ criteria. So I had a portfolio set up, and up here for view, instead of my default, I selected VMQ Stocks, and then I can see the value, momentum, and quality scores and grades, and some further information about valuation, characteristics, etc. Okay, Jenna, that was all I had. Do you want to talk about the promo and get to questions?
Yes, definitely. Thank you so much, Cynthia. Great presentation. Before we get into, we've seen a lot of Q&A coming in, so I've been compiling them in my Word document. So we'll try to get to as many questions as we can. If your question is not selected during this broadcast, feel free to email us at members@aaii.com, and our analysts will field those. But we'll try to get as many as we can in. Before we do so, I do want to reiterate, I've been posting in the chat a lot of helpful resources and good links and stuff, but I also wanted to emphasize that until January 12th at midnight Central Time, I know the screen says 10th, but that was my error. January 12th is we have like until you can, at midnight Central Time, you can take advantage of our $50 discount on any new one-year subscription to VMQ Stocks, AI Platinum, anything that is on that landing page at aaii.com/webinar-week. And you just use the promo code webinarweek50 at checkout to take advantage of that offer. But so now that we've gone through that, I think I've got a couple questions, but before we get into our audience questions, I do have one specifically for you, Cindy. So my first question is, what has surprised you most about any of the VMQ holdings or about value investing as a whole?
I would say just value investing, but I think it's easy to understand why large cap outperformed small cap, and growth outperformed value with the current situation of those top 10 S&P 500 companies still having such a very strong presence. But what surprised me was that lower quality stocks did better than higher quality stocks. And I guess what really happened was, these are stocks with weaker cash flows. They're more dependent on future earnings. They're more cyclical. And I think investors were just maybe being a little bit risky. So that surprised me a little bit.
Oh, that's a good takeaway. All right, let's take a look at some of these questions. I appreciate everyone for submitting them, by the way. Thank you so much. I will try to, like I said, we'll try to answer as many as we can. So first question is, okay, so for those who are new to the VMQ Stocks service and universe, how do you suggest those to use the ideas list? You touched on it a couple times, and we showed people how to get to the VMQ list. But if you're new to the service, how do you suggest people start using that?
Well, what you could do is you could use the ideas list to substitute. I mentioned if you are setting up a portfolio and you are maybe hesitant about choosing stocks that do not qualify currently, you could go to the ideas list and try to find a similar stock. And I just want to make sure I showed you. Okay. So if a stock currently qualifies, in portfolio notes, it will say qualifies, or I mentioned sometimes we have stocks that are approaching a momentum floor. You will see information such as that over here in the portfolio notes. So that is one way to use the VMQ ideas list, is to find stocks that qualify and may present a different option than those currently held in the portfolio.
Excellent. And another question about the VMQ ideas list. So do you cover the stocks on the ideas list in the weekly commentary, or do you just cover the portfolio holdings there?
I cover mostly the portfolio holdings, and sometimes I will cover stocks in the ideas list, just to talk about what is on the ideas list, why it's on the ideas list, and when we replace a stock in the portfolio, I will usually talk about where that stock that is the replacement, where that was in the ideas list. And for instance, if I have chosen something different than a stock at the top of the ideas list, I'll talk about why I went further down the ideas list, or why we may have passed on a particular stock. So those are ways that I do cover the ideas list.
Interesting. Excellent. And let's see, we got a couple different questions about portfolio alerts. We mentioned that we send out portfolio alerts on a regular basis. So how should investors use those? Should they serve as more of a strategic reminder, or are those, immediately buy or immediately sell, or just kind of keep it on your watch list? How do you suggest investors use those alerts to their advantage?
The best way to think about that, it's more that strategic reminder, and I would caution people, maybe when we send out an alert, just be a little cognizant if it's, say, a microcap stock, to use a limit order, but it's kind of up to the investor when they want to go ahead and make the trade. We usually, after we issue the alert, we will watch to see if we can get a good price when we are selling the old stock, and a lower price when we're buying the new stock. So I would recommend that people also use that same idea, but it's pretty much up to the investor.
That's a great suggestion. And let's see. We touched this on a little bit, but I found this kind of an interesting question. So how do you handle when a value stock, either on the model portfolio, or on the ideas list, has significant debt? Do you consider this when deciding whether to keep or sell a stock? And what if it happens kind of more suddenly?
For debt, I would have to look at all of the other valuation scores, and if everything else looks really good and debt is the only problem, then I want to dig into it and understand what type of debt it is. Is it long-term debt? Is it short-term debt? Do they have a plan where they're working to kind of clean that up and get it under control? A lot of the VMQ stocks, some of them will start off with debt, and then as they are moving through their earnings season and making announcements, they'll say, oh yeah, we're cleaning up or we paid down debt, or we have a credit line, but we're not touching it. So that would be a consideration. But in terms of, a stock would really have to meet that sell criteria before we would consider selling it.
Excellent.
So this is a rules-based quant-driven portfolio.
And let's see. So I think we had a couple questions that came in. I think when you showed the allocation of the different industries that appear in the VMQ portfolio, a couple noted that that VMQ heavily weighted towards consumer discretionary versus its benchmarks. Does this help or hurt the performance? And is this typical to see on a given year that not specifically consumer discretionary, but just a larger allocation in one category versus the other?
We're seeing a lot of consumer discretionary passing the criteria for inclusion in the portfolio. So that's kind of what's driving, or why we've come up with this, why we have so much consumer discretionary in the portfolio. And I would say that these consumer discretionary stocks are, of course, they're all driven by consumers, but they're driven by different things. For example, G3 has luxury clothing and handbags, whereas General Motors has cars. So somebody might be more likely to buy a car versus a new handbag if they had to make a hard choice. These are just driven by different things over time. And another thing is, I think it's interesting, SkyWest is in the industrials sector, but I would also think that consumers would be picky about buying airline tickets or flying if they are falling on hard times.
Excellent.
And then TriPoint Homes, that's driven by something just a little different. Just looking over the list, AutoNation and Group One, they are both companies that sell cars, but they have a little different market slant.
Excellent. And we'll just take one more question. Like I said, we are not able to get to all of them today, but please email us at members@aaii.com, and our member services team will help our analysts answer some of those questions. Let's see, but we'll take one more. I saw a couple of these come in actually. So would it be better to buy the entire VMQ Stocks portfolio all at once if you're a new subscriber, or should you try to time a few purchases at a time throughout the year? What would your suggestion be?
I would probably be tempted to look at timing the purchases and entering when each stock has a buy opportunity. But the advantage to maybe buying everything at once, or setting up the whole portfolio at once, would be getting that, I guess, bump in performance, or you're not if something moves up, you are able to realize that opportunity of buying right away. So yeah, that's it's a good question. It's a little bit of a personal question. You could also use something like dollar cost averaging to make purchases over time. And there are all sorts of different ways you could do that.
Great. And I want to say thank you so much, Cindy, for guiding us through the VMQ Stocks portfolio and the challenges, the wins of last year, and then just taking a look at all the resources that subscribers have access to on the website. I think that was very helpful. Before we move into some outro things that I'll cover, I'll talk about the promo, I'll talk about what to expect for the rest of the week, and any other important information I want to cover. But I want to give you just a few minutes if you have any last kind of thoughts you want to leave with the audience with before we sign off.
Well, I think this is a good opportunity to think about investing for the long term. And what I like about the portfolio is it makes the buying decision easy because we have the ideas list and we're selecting from the ideas list, and also the selling criteria that kind of sets forth when you need to say goodbye to a stock. I think it's tempting to hold something either too long when it's declining, or to maybe sell it too early. So I talked a little bit about like BJ's and URI. They are, at D for the valuation grade, meaning they're expensive. It'll probably take them a while to work down to F, but what that means is we're going to realize a profit, hopefully, when we eventually sell those or rebalance.
Excellent. Well, thank you so much, Cindy. And if you have questions about the VMQ portfolio, its performance, holdings, anything else, or if you have questions about just AAI member benefits as a whole, please feel free to email us at members@aaii.com. And I just always like to make this a little bit clear. The VMQ Stocks is a premium subscription. It is also a part of our AAII Platinum service, which is our bundled service. And until January 12th at midnight Central Time, you can use the promo code WebinarWeek50 at checkout to get $50 off any new one-year subscription to an AAII premium product of your choice, including VMQ Stocks and AAII Platinum. So you can visit AAII.com/webinar-week to claim this offer. And then if you'd like to attend tomorrow's webinar event, please visit AAII.com/webinars to register, and that is free to attend. We will feature Stock Superstars report tomorrow, January 9th at 1 p.m. Central, and John Bajkowski will be presenting. And this will be our final presentation of the week, which is really sad. I feel like the week has flown by. We appreciate everyone who has been able to join us for every day, or at least a few of the presentations this week. And then we got a lot of questions regarding this, so I wanted to reiterate that this presentation was recorded and a replay will be available at AAII.com/webinars. And then webinar attendees will receive an email with the link to today's recording early next week. And in that email, you'll also receive a copy of Cindy's slides, as well as links to other resources that we discussed. And if you attended another event earlier this week, you'll also receive the recording and slide deck via email. So please keep a lookout early next week with those materials. We hope you join us for our final webinar tomorrow at 1 p.m. Central Time. We will try to end the week with a bang, and we appreciate everyone who has joined us so far this week. And with that, we wish all of you viewing good health, good fortune, and a great rest of your day. Thank you so much, and take care.
Thank you. Thanks so much for joining.